What does hitting all-time highs mean for the S&P 500 and the market at large? If you've been paying attention to the markets recently, you've probably seen the S&P is trading at all-time highs. But what does that mean for the markets going forward? That's exactly what we're going to talk about right here. Hey guys, Robert Roy from WealthBuildersHQ.com, and today we'll be discussing the all-time highs on the S&P 500, what it means now and in the future, and what to expect at large. All right, so let's go take a look at the charts behind me, and let's look at what the last price of the S&P is, where we're at. Maybe we'll even look at some intraday stuff as well if we get a chance, what the past performance has been. So let's go to the charts. So what we're looking at here on my Trade Navigator Pro Scanner, we've got the S&P 500. Now this is SPX. You'll notice in the upper left-hand corner, $SPX is the ticker symbol. There are a series of lines drawn on here. Without getting too much in depth on this, there are the Fibonacci levels that we use. So the two blue lines are my start and finish point. All the other lines, the red lines, the black lines, this purple line, were all drawn automatically. The dashed lines are just $100 increments, just so we know where the 100 levels are, because stocks tend to gravitate to those levels. So we had a great move coming out of December, wonderful run into February, mid-February, a little bit of pullback, wonderful run into mid-April. Then we had a bigger pullback that took us into May, into near June. We got into the summertime with still a great market, and then we just kind of have been in this sideways wedging pattern almost. You can see these lower bottoms here, or higher bottoms here, right? They're getting higher. Higher bottoms here. The tops were holding, and recently, I will zoom in now, recently we broke out of the all-time highs. Our all-time highs were, let's grab a line. Right? Our all-time highs were back here, right? This was our all-time high and closing high. So the closing high was right about here. We broke out of that level with a vengeance, came back, we've retested it now, and we're just hanging out and we're just looking at where do we go next, right? So the price of the S&P now is above 3,000. You can see the price moving on the far right-hand side. So this is active data in the market. So we're pushing up in there. We've got some moving averages in there. But our overall pattern as we're looking on the market is bullish. So this is where people tend to either become crazy or stupid. Well, Rob, I don't want to be stupid. Good. Then watch and learn how not to be. So just because we're hitting all-time highs, that doesn't mean throw money in the market. There are things we want to look at as far as support levels. There are things we want to consider as to where it goes to next. And that's where someone that is uneducated has no idea how to find any of those things. I need you to understand exactly how to look at the market and exactly how to see where we want to get in and the whys to get in. But maybe even more importantly than the getting in or why to get in, how about why not to get in? Is this really a good time or not? As we broke out, if we look back at the chart, as we broke out on this day, was this a good place to get in? And when I say this day, let me draw an arrow to it so we're sure. That was the breakout day. We broke out of the all-time closing high, this blue horizontal line I have here, right? 30.28, what is that? 30.25.61, right? We broke out of that all-time closing high. Was that a good place? Well, if you look at what it's done, it rolled back over. Breakouts, if you're a breakout trader, then it's a great place to consider. I'm not necessarily a breakout trader. I am very much a mechanical trader. So I'm very much a mechanical trader that focuses on key levels, right? I'm looking for clear and concise entries. I drive that in my students' heads in every single way that I teach, in every different tool that we use, whether we're trading options or futures or covered calls, we look for clear and concise entries. It's no different here. Breaking out doesn't give me a clear and concise entry. It may run, I'm not saying it won't, but there's a higher probability of pullback than there is a continuation. So what if we let it break out and come back down to our level like it's doing now and look for the bounces from there? So let's go back and look at the charts again, and let's focus on some of the key levels that we want to keep in mind. So I'm going to delete the two lines that I just recently drew in there while we're on this video here, right? And just go back to the lines that I have. My next resistance above head right now is at 30.55.5. That's my next resistance level that we're looking for, right? It's a phenomenal target for us. Now, above that, we're looking at 3100, 3111. So we really have what I would call a target zone in there, right? So we're going to go ahead and just make a little yellow box in there to highlight that zone for us. We don't have a singular price point. We've got a zone between that 3,100 and 3111.25. Those are our zones. Now, there are other more advanced tools that you could also use to find the various fib levels that we're looking for, or to find the various targets or stops that we're looking for. One of the things that I am a tremendous fan of, and we'll go into this a little more in depth in another video, but is using what's called an ABC pattern, right? So I'm going to identify the move that the stock made, the S&P made, this move here to that pullback, and then it helps me to identify a target. All right, let's scrunch it down a little bit. Remember, I said 30, 55, 48. Well, we've actually got a zone here between that 30.41, 30.42 level and that 30.55 level right in there. We've got a zone. Guess what? On the breakout day, which was our first day breaking to the all-time highs, it broke into that zone. It broke into it the next day, and today the market's open. Right now it is 12:40, right, in the afternoon, East Coast time. So what's happening? We could not push up that high even yet. Market's not closed yet today, but we're running into resistance at that level. There are key levels in the market, and you need to understand how to read them, how to identify them, and how to capitalize on them. So let's talk about the Fed for a moment and what could happen to this wonderful all-time high chart that we're looking at behind us on the S&P. If the Fed comes out and announces interest rate hikes, is it good or bad for the market? And the answer is yes. It's good or bad. Rob, what does that mean? If the market was expecting a 1/4 point hike and they get a 1/4 point hike, that doesn't mean it's bad. They were expecting it. It was built into the market already. And in many cases, some of the previous ones we've had have been 75, 80% expectation of having a 25 basis point or a 1/4 point increase in the interest rate. It's built in. But that's not the key. The key is what's called the forward-looking statement. But we see 4 more increases this year. That's not what the market wants to hear. Businesses rely on low interest rates so they can borrow more money, spend more money, do more things with it. If interest rates are higher, it's harder for them to do that. So businesses want to see that lower rate. Businesses are the stock market. So the Fed's decision can have an impact, but you have to understand the impact that we're potentially looking at there. So what do you do with this information? You now see the S&P is at an all-time high. That's wonderful, but you know what? That's just information. It doesn't tell you what to do with it. You've got to have an understanding, at least a basic understanding of how to capitalize on the markets. To me, it's all about a system. It's building a system and putting it in place. Down below in the description, I'll put a link to a training that I did on the top 3 trading patterns. And these are ones that you could start using right now to capitalize on what the S&P is doing. Here's the question of the day. Has the video changed what you think about market conditions going forward? Let us know in the comment section below. If you find the material helpful to your trading, then make sure to hit the subscribe button and be sure to click on the bell to be notified of all of our upcoming videos. Until next time, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and we'll see you at the next video. Folks, thanks for watching the video. I hope you enjoyed it. If you did, please make sure to give it a thumbs up. Go ahead and click the subscribe button so you can follow along with all of our great content, and ring the bell so you never miss anything new that comes out. And folks, with that down below, we've got a couple of other videos for you to choose from that you can watch from our materials.